If you want to pass your FTMO challenge but you are struggling to do that, then this is the video for you, because in this video today, I'm going to give you an easy ICT trading strategy that if you master this strategy, then you are going to be a highly profitable trader. And not only that, you will be smashing the funding challenges every single time. Now, this strategy does not require you to find the daily bias. It's going to be a very simple strategy. So make sure that you watch it until the end, so you better understand how to use this ICT strategy to pass any prop firm challenge. But just before we do that, if you are new to the channel, consider hitting the subscribe button and turn on the notification bell. And do not forget to join my free Telegram community group from the link in description, where you can ask me and my team any question that you have regarding prop firms. And I have also added my recommended prop firms links in the description. Make sure that you use them if you want to get the funded account. Now let's deep dive into today's video and learn this simple ICT trading strategy without daily bias. Now I call this ICT strategy 3-leg strategy of ICT. What do I mean by that is, as we are not going to be using daily time frame because we don't need to find the daily bias, so we're going to be only doing our analysis on the 4-hour time frame and also on the 15-minute time frame. On the 4-hour time frame, we're going to identify the 3 legs pattern. On the 15-minute time frame, we're going to be executing our trades, putting our stop losses and also our take profit. Now, how does the 3-leg pattern is going to look like? Let's just say that we have one movement to the upside and that movement is creating a higher high. And after that, there is going to be a pullback. Now, one very important point here is that deeper the pullback, this point from where market started to go down, it will become significant. Again, the deeper the pullback will come after creating the high, this point, which is the highest point, it's going to become very significant. This first movement is going to be considered our first leg. After market creates a high in case of an uptrend and sellers come down, this is going to be considered our second leg. Then we're going to wait for the third leg to come. If third leg comes and it does not go higher than the high of the first leg and it gets a rejection here, then this will be our third leg, and this part is where we're going to be going down to 15-minute time frame. Now this third leg on the 15-minute time frame is going to look something like that the buyers are coming up, sellers are coming down. Buyers are going up again, sellers are coming down. There are going to be a lot of struggling movement to the upside until we come to the level from where last time market went to the downside. And right after we come to the level, we are going to wait until market not only gets a rejection here, but also breaks any sort of market structure, which is going to be any previous market structure. Right after we have a break of market structure, after market has reached the high of the first leg and also got a rejection from there, then we are going to get ready to take the trade. So where we're going to be taking the trade, always and always we will be targeting the extreme order block area or an imbalance in the market. We're going to wait until market comes to that level. Then and only then we will be placing our trade. We will be placing our stops above the rejection and our target at the area from where the third leg started. Now, when you will see 2 examples at least of this trading strategy, then you will come to know that how easy it is. So for the first example, we are on the 4-hour time frame on the Euro CAD pair. On this chart, we have the strong sellers movement, and after this sellers movement, there is a movement from the buyers. Now, which one is going to be our first leg? That movement right here. That is our first leg, and from where when the buyers started to go up, this movement right here is going to be considered our second leg. I don't know why my lines are so messy, but it's fine totally, isn't it? So we have our second leg. We had our first leg as well, which is the lowest point after the first leg. That is gonna be this level right here. Now what we need from the market is that come to this level for the third leg, but do not go lower than this level. Instead, just take out all the liquidity from here, do the liquidity sweep, and goes back up again. When it will do that, we're simply just gonna go down to 15-minute time frame to look for trade opportunity. So let's see how market is gonna come to this level to take out all the liquidity. And here we came, sellers, they came down to this level and they just have started to take out the liquidity. So we're gonna see whether we're gonna be having a rejection or not. It seems that yes, we are having a rejection. Definitely market just took out all the liquidity from here. So what we need to do, we need to go down to 15-minute time frame to see whether we are breaking any sort of market structure or not. So on the 15-minute time frame, this was the movement from where the liquidity sweep happened. And now at this point, we are waiting for a break of market structure, which happened right here. This was the structure that market just broke. And as it broke, we are waiting until it will come to the extreme order block area. The imbalance, it's going to be right here. This whole level is going to be our imbalance, and we're going to wait until market comes to this level. We will place the trade, put our stops lower than the rejection, and our target at this level from where this third leg started to come. This is the zoom out view of this movement. That was our leg 1. Then we have our leg 2 here. Then we have our leg 3 here. Now what we're going to do, we're going to simply just place the buy limit here. We're going to place our stop loss just lower than the rejection and our target right here from where the third leg started. It's going to be more than 5 risk to reward ratio trade. So let's see whether it's going to be executed or not, and whether market will go to our take profit to give us some money or not. So our trade just got executed. That means we are in the trade with our stop loss here and our take profit there. And so far market is having a bit of time to move to the upside, but it does not matter. As long as you are in the trade, you have your stop loss, you have your take profit, there is no need for you to sit in front of computer, look at every single candle after every 15 minutes. There is no need for that at all. Just move away, give some time to trade to work out. It's gonna work out whether in your favor or against you, because trading is a game of probabilities. Sometimes you make profits and sometimes you lose profits, but you have to just make sure that most of the times your trading strategy should be making you a lot of consistent profits. So let's see whether it's gonna hit our take profit or not. And it just hit our take profit. And that was a beautiful trade with an overall 5 rewards. And the reason why we put our target here, which the area from where the third leg started and second leg ended, because there is a high chance that market, it will come simply just down. We do not want to take the risk. We need to make sure that our targets are at the area which are going to be respected majority of the times. That was the first example that I wanted to show you. Now let's have a look at the second example. Now that's the US dollar Japanese yen pair right here on the 4-hour time frame. We have this strong movement from here to here. Buyers made a very strong movement, and right after that, look at how deep the sellers came. So we have our first leg right here, and this is our second leg. And where is the high of the first leg? That's right here. So we need buyers to come higher than the high of the first leg, takes out all the liquidity here and makes a rejection. Then we will move down to 15-minute time frame. So let's see how does the buyer will come. And here we can definitely have an idea that market just went a little higher than the high of the first leg. That means there is a chance that we are gonna go back down and it's gonna do a good liquidity hunt here. And we have that movement that we needed. Market just came back in. It took out all the positions from there. And now we are doing the rejection. So what we need to do, we're going to simply go down to 15-minute time frame. Now that's the market structure on the 15-minute time frame. We always need to make sure that we are selling from the high point and we are buying from the lowest point. Now right now market, after it made a rejection, we do not need to take the sell from here. I already said that we are going to wait until market comes to the imbalance area. The extreme order block area is going to be here. And we're gonna wait until market comes to that level right after all of this movement happened. So we're gonna just place the sell limit right here with the stop loss higher than the rejections, and our target is going to be the low of the second leg or the area from where third leg started, and it's gonna be giving us more than 15 rewards. Imagine that you're only risking 1% on this trade and you're trading $100,000 funded account with this simple ICT strategy. After risking 1%, if it's gonna perform in your favor, you're gonna be making 15% or $15,000 on a $100,000 account from just one single trade. Now let's wait and see how it's gonna perform. Our trade just got executed and sellers, they have started to go down a little bit. And we have this big sellers movement right now. And it just hit our take profit. That was the second example that I showed you, and you can definitely see that how well this simple ICT trading strategy works. If you master this simple ICT strategy where there is no requirement of the daily bias, you can simply just follow these 3 simple legs pattern on the 4-hour time frame, then can move down to the 15-minute time frame to look for the trade opportunity. If you master it, you're gonna be smashing the challenges guaranteed. You will be able to pass the challenges every single time, and you will have a good risk to reward ratio from every trade that you're gonna take. Not only that, but also a very good winning percentage. So make sure that you backtest this trading strategy enough times to master it, because mastery, it comes from doing the same thing over and over again. I hope that you guys got a lot of value out of this video. If you did, let me know in the comment section what do you think about this trading strategy, and are you gonna use this trading strategy on your account to pass the challenge, and are you gonna backtest this strategy or not? If you did like this video, consider leaving a subscribe and also turn on the notification bell, and thank you so much for watching until the end. This is it from this video guys. I will see you in the next one. Bye for now.